Hello, I'm Larry Pond. Today we're going to talk about the business use of your home. So let's get started with a disclaimer from the IRS. So I'm going to read this to you. This is part of my volunteer efforts with the Internal Revenue Service, and this is part of the seminar series to keep taxpayers informed about taxes. The instructor for this program volunteers his or her services as a public service and receives no compensation from the Internal Revenue Service, the IRS. Neither the instructor, business, or organization has a preferred relationship with the IRS. The IRS and the United States government do not endorse or guarantee use of the instructor's services or business. Sponsoring or not sponsoring any organization with which the instructor has any relationship will not result in any special treatment from the IRS. Well, a little bit about me. I'm a CPA, a PFS, a CFP, an enrolled agent, United States Tax Court practitioner, and accredited estate planner here in Redwood Shores, California. I've been in practice since 1986, and I love talking about taxes. I'm also an income tax instructor at the College of San Mateo. So let's get started today. So we're going to talk about the home office deduction. But first of all, let's give you a quick reminder of some recent tax law changes. So effective starting in 2018, and this is as a result of the passage of a tax law change called the Tax Cut and Jobs Act, which was signed by the president at the end of 2017. And what that did was it eliminated the deduction for miscellaneous deductions. It eliminated the deductions for unreimbursed employee business expenses, which would have been reported on Form 2106. So in recent years, we've been getting this question a lot. A lot of employees were sent home by their employers to work from home, to have an office at home. And many employees were asking, can we deduct those expenses? So unfortunately, employee expenses for business use of the home is no longer allowed. So if you're an employee and you're working from home, there are no home office expenses or any unreimbursed business expense deduction. So my suggestion about this is to get reimbursed by your employer for your business expenses at home. Also, as a result of this tax law change, there's a limitation on how much you can deduct for state and local taxes. So you cannot deduct more than $10,000 if you're married, or $5,000 married filing separately of total real estate taxes paid, also including state and local taxes, state income taxes, to report it on the combined Form 8829, which is the home office expense form, and Schedule A, Form 1040. So this is a recent change, and this is for employees who are working from home. Our discussion today are for people who have a business working from home, a Schedule C. So here's what we're going to talk about today. We're going to talk about calculating and claiming the deduction for business activities in the home, the business use of the home, the requirements to qualify for a deduction, how to determine the business percentage, what type of expenses get included, determine the deduction limits, and where to deduct these expenses on your return. So first of all, let's talk about the home. What is a home for purposes of the home office deduction? Well, that includes a house, an apartment, a condominium, a mobile home, or similar property which provides basic living accommodations. And also structures on your property, an unattached garage, a studio, a barn, or even a greenhouse. And what's been a real hot topic recently are what's called ADUs, accessory dwelling units, ADUs. And in many places, the cities are getting a little more lenient on allowing people to put those in their backyards as additional housing. Now, the home, you don't have to own it. It could be a home that you own, which you would have a mortgage on it, or it could be a property that you don't own and you're renting if you're a renter. So home office deductions can apply to either owning a home or renting a home. So when calculating the home office deduction, there's what's called the simplified home office deduction method. And it's much easier than the standard method because you don't need to compile all the expenses of your home office. The simplified home office deduction is just based on the square footage of your office. So it's a replacement of having to make all those calculations. So used to determine deductible expenses for qualified business use of a home. The standard method could be complex and burdensome because you'll need to add up what your utility costs are, your insurance, your repairs, your maintenance, and all the costs associated with operating a home. The simplified method is intended to replace this burden. So the simplified method is capped at $1,500 per year and is based on $5 a square foot for up to 300 square feet. So 300 times 5 is $1,500. So that can work out pretty well using the simplified method. Now, you can elect to use either the simplified method or the standard method for any taxable year. But you cannot later change to the other method for the same year. So you can't double dip. You can't use the simplified method and deduct actual expenses. It's either one, standard method or the simplified method. And the amount allowed is in lieu of a deduction for actual expenses. And this gets reported on the bottom of Schedule C, which is part of your Form 1040, is the profit or loss from a business for a sole proprietorship. And you calculate using the simplified method worksheet in the instructions for Schedule C. So it's pretty easy to figure this out. You take a tape measure and measure your room, to see what your square footage is. Just take a tape measure and measure it. Or if you have a floor plan of your house, your floor plan would have measurements there, and that could be very helpful to figure out the square footage. You also need to know the square footage of your house. So that works out pretty well, but it's based on the square footage. Now let's talk about qualifying for the business use of the home. First test we have is called the exclusive use test. And we're going to go over some examples of this to make sure you meet the exclusive use test. So you must meet specific requirements. Now the deduction may be limited. We'll go over some examples of that. You must meet the following exclusive use test. Number one, the business part of your home must be exclusively used for your business. It must be regular and it must be your business. So that's the exclusive use test. Now, in terms of the business part of your home, it has to meet one of the following, not all three, just one of them. Number one is the principal place of business. Is it the principal place of business? It's a place where you meet with patients, clients, or customers in the normal course of your business. Or it could be a separate structure not attached to your home that you use in connection with your office. So I've had clients who bought a shed or built a shed in their backyard, and the commute was just walking out the back door into this separate shed. And they really liked it. It's separate from the home. It's not part of the home. It's quite cozy, had all the amenities they needed. Some sheds are large enough to have a bathroom, some don't. Some are large enough to have a little kitchen, some don't, or you just walk into your house to use your kitchen or your restroom or whatever. But it works out pretty well. So some of my tax colleagues run their tax business out of a shed in their backyard, and they have a side door for their clients to walk to the side of the house. So that's a little better than walking through your house or to get to your office. And that gives you a little bit of privacy. So, if your yard accommodates it, and I know a lot of cities are allowing that now, so it's a pretty interesting, and some are quite nice. I went to see a friend's place, and he actually built a tree house. Yes, so his home office was a tree house, and that was pretty impressive and pretty darn cool. So let's talk about Ruth here. Let's see if she has the exclusive use. So Ruth is a graphic designer. She's a graphic designer. So her computer is in her family room. That's where she does her design room. Her family also uses that room for recreation. They watch TV, or maybe there's a pool table in there. I don't know. But can Ruth claim a business deduction for the use of the family room? What do you think? Unfortunately, not. So the family room is not exclusively used for her business. So therefore, she cannot claim a business deduction for its use. And I've gone through many home office audits with the IRS, and that's what they look out for. They look around the home office and see if there's any personal items in there. Is there a child's crib in there, or is there a bed in there? Is there a TV in there, or whatever? If it looks like there could be some personal usage, then you won't meet the exclusive use test. So that's what they're looking for. So look around your home office. Make sure it's exclusively used. Exclusively used. Let's take a look at Greg here. Let's see if he meets the exclusive use test. So Greg brews natural sodas in his garage. The garage is not attached to his house, but he only uses the garage for brewing and selling. Now, part of the garage is used for the brewing. The other part of the garage is where he conducts his tastings and he sells his soda. So does Greg meet the requirements of the exclusive use test? Yes, he does. Greg can claim a deduction for the business use of his garage. The use is exclusive, regular, and for his business. Now, if he parks his Corvette in there also, that might knock us out of the exclusive use test. So if it's only used for his soda business, then he meets the exclusive use test. So there's some exceptions to the exclusive use test. Do not have to meet the exclusive use test if you use part of your home for the storage of inventory or product samples, or use part of your home as a daycare facility. So the storage of inventory and daycare facilities have separate requirements. And this is spelled on a Form 8829, which is the home office form, because, for these types of businesses, a daycare, a lot of times the kids have full run in the house, or most of them run the house. And also, we have quite a few clients who store inventory in their garage, and that's where they put it because there's nowhere else to put it. Now, it depends on what your business is all about. Everyone has different scenarios. We've had clients who actually manufacture. They produced pillows or whatever, and the whole downstairs of the house is full of sewing machines and all that. So, we took a substantial deduction for that. That's all used for business because the room is full of machines. Or another case was a psychiatrist. He had his psychiatry practice downstairs of his house, and he lived upstairs. And the interesting thing about this house was that it was on a corner. It was on a corner location. So the door to the psychiatry practice was on one street, the door to the home was on another street, and they have two different addresses. And that worked out pretty well for him. Okay, now we have what's called the regular use test. So to qualify under the regular use test, you must have a specific area of your home for business on a continuing basis. So you don't meet this test if the business use that area is occasional or is incidental, even if you don't use that area for any other purpose. So here's an example. Let's talk about Tom here. Tom is a painter. So he has a separate studio in his home that he sometimes paints in. But he's an outdoor painter. So most of the time, he's painting outdoors. So can he claim a business deduction for the use of his studio? No, he cannot, because Tom cannot claim this, his deduction for the use of the studio. He only used the studio occasionally and not on a continuing basis. So this is one of the questions we have to ask our clients is, are you using this room all the time? For most people, they are. But if it's not used that often, that could be a problem. All right, let's talk about the principal place of business test. Principal place of business. Now, you could have more than one business location, including your home, for a single trade or business. You can have different branch locations, different meeting places for clients, or different stores, different cities, or whatever. You can have multiple places of business. You don't have to have one place of business. So you qualify to deduct expenses for the business use of your home if it is your principal place of business. You can have more, but the home office must be the principal place of business. So it's a place that you use it exclusively and regularly for administrative or management activities and have no other fixed location where you conduct these substantial activities of your trade or business. This rule came from a famous tax court case regarding a surgeon. Well, where does the surgeon do his work? He does it in many places. He goes to different hospitals. He's not tied to one specific hospital. But his principal place of business was his home, because that's where he did his paperwork. That's where he did his continuing education, his billing, and all those kind of things are done at his home. That's not done at the hospital. He shows up to the hospital to do the procedures, but he doesn't really have an office there. He just goes to the operating suite and he has privileges at various hospitals. So this is where this guidance comes from that very famous court case from many years ago. So the administrative or managerial activities include billing customers, keeping books and records, ordering supplies, setting appointments, forwarding orders, writing reports. So you kind of get the gist of what these administrative or managerial activities are. So activities that don't disqualify your home office. So you might hire other people to do those same chores. Just because you hire a billing service, you hire someone does your accounts receivable, someone does your appointments. It doesn't disqualify your home office. Employing others conduct your administrative or management activities. Conducting these activities at places that are not fixed locations, such as the doctor at the various hospitals, occasionally conducting minimal administrative or management activities at a fixed location, conducting substantial non-administrative or non-management business activities at a fixed location outside of your home. That's the example of our surgeon. He does his operations at these various hospitals. Well, that's not fixed locations, and those aren't management activities. Those are actually providing the work he does. Here's another good example of this place of business test. Principal place of business test is Jim. He's a self-employed plumber, right? Can a plumber actually work remotely? Probably not. He needs to crawl under your sink to fix things there, or crawl under your house, or install a new water heater, those kind of things. Those got to be done on site. So Jim is a self-employed plumber. Most of his time is spent at customers' homes and offices installing and repairing plumbing. He has a small office in his home that he uses exclusively and regularly for administrative or management details of his business. He has bills customers, collect his bills, pay his expenses, get scheduling done, and all that. However, Jim doesn't do his own billing. He uses a local bookkeeping service to bill his customer. Does Jim's home office qualify as a principal place of business? Yes, it does. He fits the classic fact pattern here. He uses the home office for administrative or managerial activities. His choice to have billing done by another company does not disqualify his home office as his principal place of business. Jim's business meets all the qualifications, including the principal place of business. So let's talk about the meeting place for customers test. So you qualify under the meeting place for customers test. You meet your patients, your clients, your customers in your home in a normal course of your business. Deductible expenses for part of your home is used exclusively and regularly. So the deductible expenses for the part of your home is used exclusively and regularly. You physically meet with customers and use your home as substantial and integral to the conduct of your business. So let's talk about Sarah here. Sarah is a great example of this because she is an interior decorator. So her clients come to her home to visit her, to look at samples and patterns. And she's got a room designated exclusively for this purpose. It conducts all administrative and management functions there. Now, after the clients decide on what they want, they meet with her in her place, then the rest of the project is at their home because she's got to get everything installed, designed, and put together. So does Sarah's home office qualify as a principal place of business for deducting expenses for its use? Yes, it does. Sarah's home office does qualify as a principal place of business for deducting expenses for its use under the meeting place for customers test. She meets with clients in her home in their normal course of business. So Sarah does meet that. So let's talk about the separate structure test, And I get a kick out of those little sheds that are for sale, or those ADUs that are for sale. Some are quite interesting, quite impressive. So it could be a freestanding structure. It could be a studio, a garage, a studio shed, or a barn. It doesn't have to be your principal place of business or a place where you meet patients, clients, or customers. Again, it's a separate structure. So all those other requirements don't really matter. But most people do everything there anyway. So let's talk about Joanne. So Joanne builds custom designed furniture in her detached garage. So when clients and Joanne discuss the plans together, they talk in the dining room. So does her garage qualify as a separate structure? Yes, it does. Joanne's garage is a separate structure and is used exclusively and regularly in her business. She does not have to meet her clients there to be eligible to deduct the expense for its use, subject to the deduction limit. It's a separate structure, so that could be easier. So let's talk about deduction limits. So first of all, let's talk about the business percentage. So most expenses related to the business use of your home is limited to the percentage of your home used for business. So you compare the size of the part of your home that is used for business to your whole home. Now there's two commonly used methods. The area method, which is based on square footage, or the number of rooms method. The number of rooms method is kind of interesting because every room is shaped and sized differently. But do the math to see which gives you the better result. Now, the area method only applies if you use the simplified method. So simplified method is using the square footage. Can't use number of rooms for the simplified method. For the standard method, we have a choice of these two. And it's pretty easy to measure the office, get a tape measure, you can measure it, or take a look at your floor plan to see what the measurements are there, or just count the rooms. I've been able to prevent an IRS agent having to visit the home by giving them a floor plan. Floor plan could be part of the appraisal, or it could be from the builder of the house, or some reputable source. It's not a floor plan drawn by me on a napkin. No, that's not going to fly. But I've had quite a few cases where the IRS agent said, "Oh, I want to look at the home office," and I said, "No, they're not comfortable with that. But tell you what, I've got photographs, I got pictures of it, I got floor plans, and also a lot of this information is public information. It could be on your property tax website, or a lot of these real estate websites have a lot of information. So a lot of it's public. So the client doesn't have to, the IRS agent doesn't have to go there to check. But for me, if that were to come up, I usually don't want the taxpayer to be around. I'd want them to leave the house, and I just play Larry the realtor, show them around, show the house, show the office, and make sure that we meet the requirements. So let's talk about the area method. To use the area method, you divide the area used by business by the total area of your home. So for example, if your office is 240 square feet and your home is 1,200 square feet, then your business percentage would be 20%, which is 240 divided by 1,200. So that's 20%. To use the number of rooms method, you divide the number of rooms used by your business by the total number of rooms in your house. You can use this method if the rooms in your house are about the same size, but that's not the case. So for example, if you have 10 rooms in your house and you use one of them for your office, so your business percentage would be 10%, 1 divided by 10. So to record the business percentage of your home business, this is on the very top of the Form 8829. So Part 1, Form 8829, which is expenses for business use of your home. So this is where you report and calculate this deduction. So 2 types of expenses related to using your home for business. So what type of expenses? So those relate to the business activity in your home, but not to the use of the home. So those are business expenses. It has nothing to do with the home. And then there's the business use of your home. The business use of a home, there's 3 categories, right? 3 categories. There's direct expenses, indirect expenses, and unrelated expenses. So let's talk about the expenses related to the business activity in the home. This is the overall business activity that's in your home. First of all, you have what's called ordinary and necessary expenses. And that's what you see on Schedule C of all the list of expenses here. There's advertising, business taxes, business license, car and truck expenses, salaries for employees you have, supplies, travel expenses. So these expenses are not limited to the business use of your home percentage or the deduction limit, and it's fully deductible on Schedule C of your Form 1040. So for the business use of the home expenses, you got direct expenses. So these are generally deductible in full unless subject to the deduction limit. So examples are painting or repairs made only in the area used for business. Or you might have high-speed internet just for your business. So, you're painting your home office. Well, that's 100% deductible. That's a direct expense. You have to upgrade your electrical. That's a direct expense. I'm trying to think of other expenses that are direct expense. Those are the most common ones. Painting it, building shelving, those sorts of things. Indirect expenses are based on the percentage of your home used for the business. So those are overall expenses, such as insurance, because you pay the insurance premium, it covers your whole house. So we got to take a business percentage of that. Utilities, right? Generally, our utilities are, we get one bill, it covers the whole house. Repairs, general repairs of the house, general repairs. But the unrelated expenses are not used for the business. So those are not deductible. Has nothing to do with your business. So lawn care or improvements to rooms not used for a business. So if you're remodeling your bedroom, you're remodeling your kitchen, and those aren't used for your business, then they're unrelated expenses and they don't count. However, those improvements could add to the basis of your home, but it's not part of the business use of the home calculation. So it's important to keep good records, right? It's very important to keep good records of what expenses you have, so we can know which category to put them in. So let's talk about deductible expenses. So business part of these expenses can be used to calculate your business use of the home deduction. So for the business use expenses, so those are real estate taxes, mortgage interest, deductible mortgage interest. So if your mortgage is too high, then not all of them will be deductible. Qualified mortgage insurance premiums and casualty losses. So certain expenses are not deductible only if you use your home for business. So insurance, rent, repairs, utilities, services, and depreciation on your home. So deduction limits, it's based upon your gross income. If you're using this, if you're using the standard method or even the simplified method. Because if you have a business loss under a simplified method, there's no deduction. If you have a business loss using the standard method, the expenses get carried over. So gross income from your business equals or exceeds business expenses. You take business income minus your business expense, deduct all business expenses. So gross income is less than total business expenses. The deduction for certain expenses are limits. So that's when you have a loss in your business. Expenses are limited to gross income from your business to your home minus ordinary necessary expenses and the business part of expenses. So expenses not deducted due to the deduction limit can be carried forward, and this is reported on Schedule C. So here's the Part 1 of Form 8829. And so take a look at line 1. Line 1 is the area used regularly and exclusively for business, really for daycare or for storage of inventory or product samples. That's line 1. Line 2 is total area of the home. 1 divided by 2 gives us our business percentage. And then lines 4, 5, and 6 is if you have a daycare facility. Those are some extra calculations there. Part 2 of Form 8829 is where you figure out your allowable deduction. So if you look at column A here, those are the direct expenses. So we have direct expenses. And column B is our indirect expenses. So that would be the insurance, the repairs, the maintenance, and those sorts of things. If you don't own your home, then there probably isn't any mortgage or property tax. However, look at line 19. That's where you enter your rent expense here. And also, if you look at line 30, if you own your home, you do have to claim depreciation. You can't elect to say, hey, I don't want to claim that because I don't want to have to recapture it, but you will. You will. So line 30 is where you input your depreciation. And then line 36 is at the very bottom there. That's the amount that's deductible and flows to your Schedule C. So this is Form 8829, very important form. And then goes to Schedule C here. If you're using the simplified method, if you look at line 30, that's the simplified method. Or you can enter on line 30, the expenses for business use of the home. So that's where it flows. So you calculate it Form 8829, then it flows to Schedule C. Now, then you either had a net profit or a net loss on your business. Now, if you have a loss, then it could be limited and then carried over to future years. So when you start making some money, you have some income, then that income can offset any carryover losses. So here's what you cannot do. What you cannot do. Well, number 1, do not take a double deduction for real estate taxes and mortgage interest. So when we're figuring out which is business, which is personal, the business portion is deducted on Schedule C. The personal portion is deducted on Schedule A. So if it's 20% business, 80% personal, so 20% goes on Schedule C via Form 8829, 80% goes on Schedule A. You can't claim it at both places to get more than 100%. You don't report the business portion of taxes interest on Schedule C, on the top part of Schedule C. I've seen a lot of taxpayers make that mistake. They put it on Schedule C. They ignore Form 8829. Use Form 8829. Number 3, report only the personal portion on Schedule A, itemized deduction. Because Form 8829 is where you split between personal and business. And number 4 here is amounts reported Schedule C and Schedule A should be the total interest and taxes paid for the year. So if we take the business portion and the personal portion, add those together, that should get you to the 100% of the cost, not more than that. For more information, take a look at publication 587, business use of the home for more specifics, more information, more worksheets. Also, the instructions to Form 8829 are also very helpful too. So what happens when you sell your home when you did use it for business? Well, there's some special rules you need to be aware of. So if you use your home for business, special rules apply when you sell it at a profit. You pay tax on the part of the gain that's equal to what you claim or could have claimed for depreciation over the years. So that's the number on line 30 of the Form 8829. So that gets what's called recaptured, and you got to pay tax on that gain. Doesn't matter if your gain's been fully excluded on your sale of home or not. Now, you can go to IRS publication 523, selling your home, for more detailed information. There's a whole section on it, a whole lot of pages on that. So this is important, right? Record keeping is vital to provide information needed for calculating deductions for the business used at home. Keep good records. That's the biggest defense you can have. So most people accurately report their income and taxes. So you just got to watch out for illegal tax avoidance schemes. So what you can't do is you can't convert non-deductible personal living expenses and transform it into deductible business expenses. We've seen a lot of people get in trouble with this. Quite a few celebrities. So if you look at the news, there's been some very well-known celebrities who've gotten in trouble, and now they owe substantial amounts of tax to the IRS. You can go to irs.gov for more information how to avoid these type of schemes. Every year, the IRS issues what's called a dirty dozen. So you can go to irs.gov. In the search box, just type in dirty dozen. Dirty dozen are the top 12 tax scams the IRS has identified. And basically, that list is to educate us and tell us what to look out for. Here's a nice handy chart to compare the methods of calculating the home office deduction. On the left here, we got the simplified method. On the right here, we got the regular method. So the simplified method, deduction for the home office use of a portion of the residence is allowed only if that portion is exclusively used on a regular basis for business. That's the same for regular or simplified. And the allowable square footage use of the home is for the business not to exceed 300 square feet. The regular method doesn't have a square footage limitation. The percentage of home is used for business, so whatever the business portion divided by the total. With the simplified method, it's a standard $5 per square foot used to determine the home business deduction. The regular method is you used actual expenses determined and records maintained. So if you want to take the regular method, we'll need to know what your repairs and maintenance of your home is. Well, that also includes any association dues, insurance, repairs and maintenance, and all those type of costs, and we take a percentage. Home-related itemized deductions are claimed on Schedule A. For the regular method, it's allocated. Home-related itemized deductions are portioned between Schedule A and the business schedule, either Schedule C or Schedule F. You can use the home office for your farm for Schedule F. Simplified method, no depreciation deduction. What that also means is there's no recapture of depreciation upon sale of the home. However, on the regular method, depreciation deductions for a portion of the home used for the business, and that's calculated at the very bottom of the Form 8829. But if you did claim depreciation on the Form 8829, there's recaptured depreciation on gain upon the sale of the home. With the simplified method, the deduction can exceed gross income from the business used the home, less business expenses. Regular method, same thing. Same thing. The deduction cannot exceed the gross income from the business use of the home, less the business expenses. So any amount in excess of the gross income limitation may not be carried over if you're using a simplified method. There's no carryover. For the regular method, the amount in excess of gross income limitation may be carried over. So if you have income next year, you can use the offset against this. Loss, a carryover from the use of the regular method in prior year may not be claimed if you're using the simplified method. So you can only use the loss carryover for the regular use method in prior year, maybe claim if the gross income test is met in the current year. So if you have carryovers for the regular method, if you want to take advantage of those carryovers, use the regular method. Don't switch to the simplified method. So let's go over a quick review of what we talked about today. We talked about a lot. So the home office deduction is not that straightforward. So there's a lot of considerations to be aware of and to be careful. So we talked about the requirements to qualify for the deduction. We talked about how to determine the business percentage, the types of deductible expenses, determine the deduction limits, where to deduct this on your tax return, and what happens when you sell your home, the importance of record keeping, stay away from the tax avoidance schemes, and the difference between the simplified method and the standard method. So thank you for watching. I really appreciate you being here. I love doing this. So if there's other topics you'd like to see covered, let us know and we'll put something together for you. Well, thank you very much and have a great day. See you again.